Hello and welcome to another edition of the GLIO CEO Q&A series. My name is Fraser Hughes and I'm the CEO of GLIO. Today we've got a great discussion on energy transportation with Piers Norton of ONEOK and Rodney Clayton of Duff & Phelps Investment Management. Guys, the floor's yours.
Thanks, Fraser, and thanks to GLIO for everything that you do and for hosting this conversation. Piers, it's great to be with you.
Hey, great to be with you too, Rodney. It's great to see you. And I also want to echo everything that GLIO does for the industry. They're renowned for their infrastructure and the support that they give us. So thank you.
All right, well, let's jump right in. There's obviously been a lot of excitement around energy and a lot of the opportunities ahead. Maybe we could just start with you providing a quick overview, Piers, of ONEOK's businesses and the areas which you operate.
So I'll kind of shorten this down a little bit, Rodney, because ONEOK actually was founded in 1906, primarily as a natural gas utility business. And it was, it went along there for decades and decades until around the year 2000, when it really started to transform itself into what it is today. It's done that through multiple acquisitions and, frankly, multi-billion-dollar organic projects that as those acquisitions happened, those projects were done to get interconnectivity, to the, to all of the assets. And it's now grown into one of the largest midstream companies in the United States. We're extremely proud of that. We're extremely proud of our people that have been able to accomplish that. So it's quite the story.
And we know you've been busy lately. Over the last year or so, ONEOK's completed nearly $25 billion of acquisitions, so very busy period. Piers, can you briefly walk us through some of the recent M&A journey and share some insights that guided the decision-making process around those?
Yeah, it really started, Rodney, in 2021. We sat down and had just an honest assessment, of where we were as a company and looked at our assets and looked at how they're performing, which they're performing well, but as leaders of this company, it's our responsibility to make sure that we are setting up the company, for those future generations. It's going to have the same opportunity to run these assets that we have, and it's a privilege, and we're blessed to be here. So we sat down in 2021, did an honest assessment, and we actually came up with 9 key criteria that we felt like we needed to address in order to sustain the company and to grow the company and to bring value to all of our stakeholders, in the future for the next decade. And when we did that, we socialized that with our board. They got on board with it, and then we started using that framework as a filter of companies that we might want to acquire. We called it our shopping list. There's 2 ways to go to the grocery store, with a list and without. And if you go without, you're going to do some impulse buys. Well, the same thing happens to you, when you're in the M&A business. So we got very targeted on what we were looking for. And the first one that came to mind there was, that went through the filter, was Magellan. And it was primarily because it was a different business that we had, but it also interconnected with the businesses that we had. So refined products and crude is a nice complement to the NGL business. And it not only diversified us into a new platform, but it also diversified us kind of across the country geographically. So that was what drove that. And then once we did Magellan, we were able to return back to some of the roots of gathering and processing and natural gas transmission, especially on the intrastate side. And so that's the reason we followed that up with basically Medallion, which supported our crude business, and EnLink, which supported our gas gathering and processing business. And so we diversified both geographically and actually, also with Magellan through a new platform.
That's great. And you've really led that consolidation wave that we've seen in midstream, but certainly we've seen other companies active as well. What do you think is really driving the consolidation right now in the midstream sector?
I think it's, we mentioned this a little bit, in our story, which is, I think companies are looking to diversify. They're looking to diversify across, kind of interconnected platforms, but they're also looking to diversify geographically. And so I think that's what's driving it. I think, when I started back in the business in the early 1980s, almost in the entire structure in these companies were C Corps. And then if you can kind of remember to the late 90s, early 2000s, there was this switch to MLPs, the master limited partnerships. Well, in an MLP, you distribute basically 100% of your cash. And the tax structure is different for the ownership. When that happened, it really trapped a lot of assets, inside those structures because you had to have it because you had to make the unit distributions, for your shareholders and your unit holders. And so today, fast forward, a lot of those MLPs have switched back to C Corps. So you mentioned, kind of what started this, this whole thing. I think it's diversity and I think it's scale that people are trying to achieve. But at the same time, today, I think you'll see kind of more trading of assets because in a C Corp, it's much easier to bring individual assets out that are complementary, to other businesses. I'll give you a great example of that. We recently divested ourselves from the interstate assets because it had really no interconnectivity with our assets. So that those assets would bring more value. But if we were an MLP, more than likely we would not have diversified ourselves out of those assets. So that's just an example of the structure of the company itself can make a difference as to what happens to individual assets.
That makes a lot of sense. As a midstream company, how is ONEOK participating in the energy transformation and meeting the global need for more energy?
So you just mentioned a word that's a buzzword for me, and it's transformation, because for years, all I heard about was transition. And to us, transition means that you're moving away from something and you're going to something entirely different, and you're not going to go back. And we strongly feel that as it relates to fossil fuels in general, that it's more of a transformation story than it is a transition story. In fact, we actually add to that it's about addition, energy addition instead of energy, transition. And statistics will show that too. You can look at it and say that, we use the same amount of wood these days as we did 200 years ago. And so, that's that's something it's just a fact. And if you look at that, you've had wood that had added to, that coal got added to wood, that gas got added to coal, nuclear got added. So and what drove that addition was the fact that you had population increase and more energy consumed. And you're going to see that, I think, through the rest of the world too. The model was really the United States as to how that all happened.
All right, that's great. Speaking of energy demand and using more energy, what about ONEOK's role in LNG exports and meeting growing demand for natural gas? We're seeing a lot of that, specifically these days with artificial intelligence and data centers and the expected increase in demand from those users. Maybe talk a little bit about that.
So the first thing I want to do, Rodney, is kind of level set on natural gas in general. I'm going to get to your question in a minute about LNG and AI. But when you look at natural gas and you look at the markets that it serves, which it serves electric generation, it serves residential customers, it serves industrial customers, commercial customers. So you got four really distinct different segments that consume natural gas, that pull the demand for natural gas. And in all four of those segments, it's essentially 40% market share. So anytime you have a business that has 40% market share with a completely diversified group of customers in each of those segments, you have a very, very sustainable model. So the base load and the base demand for natural gas for electric generation and for residential, industrial, and commercial customers, I think is going to be extremely sound for decades. It's just very hard, to unwind everything that natural gas does. Now, what you're talking about in AI and LNG is the growth of natural gas. And for instance, it's been almost 2 decades since we've actually increased the consumption, of any sort of energy in electric generation. But that's what AI is going to do. It's going to start to increase that. And what's kind of unique about that is 70% of all the natural gas in the United States comes with liquids. And so that means that not only are you going to have more natural gas flowing for AI and for LNG, and just a quick note about LNG, the reason we think that's going to grow is because basically, 1 million or 1 billion people over the world actually consumes about 13 barrels of oil equivalent per year per capita, when the other 7 billion consume about 3 barrels of oil per capita per year. So the 13 or 14 is not going to go to 3, and the 3 is probably not going to go to 13 or 14. But it is going to increase around the world. So that's going to really drive a lot of the LNG. We already export 14 BCF a day, and based on the permits, that's going to grow to what's expected to be at least 28 BCF per day. But all of that increased gas consumption is going to come with liquids, which means that you're going to have more ethane, propane, isobutane, normal butane, and gasolines.
And I think that's a great segue into my next question, which was about the liquids, opportunities around exports of LNG, petrochemicals facilities, refined products demand. What are you seeing there?
Well, it kind of goes back to, everything kind of goes back and anchors to additional natural gas production. And that additional production is going to come with it more ethane production. And that ethane production is going to provide a very affordable feedstock to the petrochemical industry. So over the last 2 decades, there's been quite a bit of onshoring, meaning that it came from other places in the world back to the United States in the petchem industry. So, but part of the reason that decision was made was because of the shale revolution and the fact that we have so much of that product. I was with some E&P CEOs the other day where they made a statement that, of all the production that's down there, that we probably have only tapped into maybe 15%. So there's a lot of natural gas left here in the United States. That's going to provide a very long-term feedstock for the petrochemical industry, which is going to advantage the petchem industries in the United States, not only here domestically, but worldwide. And then, when we think that's going to be a real driver, to the success of the petrochemical industry, which translates into the success that we're going to have.
Yeah, maybe a follow-up there, Pierce. We hear a lot of talk about refined products and maybe what the future demand for refined products looks like, as people think about EVs. But you mentioned the petrochemical side, and I think a lot of people lose sight of some of the more positive demand trends that we see there. How do you see those two potential forces combining there when you think about maybe road fuels versus petchem? How does that balance out in your mind?
Well, again, the more natural gas you produce, the more NGLs you produce. One of those pieces of the NGLs is going to be the gasoline piece. You also have, when I said 70% of all the natural gas has NGLs with it, the majority of that comes from oil production and what we would call casing head gas, which is the gas produced along with the oil. We have the ability to separate that, in the process, as the oil is produced. So that in itself is going to have, so you're going to have more oil production. So that means you're going to have enough, gasoline consumption here domestically and, to ship those, across export docks too, because that same phenomena of, kind of an increased ability to have a different and a better lifestyle around the world is going to come with needing, the products that you have from the oil industry too. We're actually seeing, slight increases. Our projections show that we're probably going to increase probably around 1%, which doesn't sound like a lot. But what's one of the reasons that we went the direction of Magellan is because you have very stable cash flow that can grow, modestly, but you can do that without hardly any capital going forward. So anytime you can have a business that sustains a significant amount of EBITDA, which in this case, when we bought Magellan, it was around 1.5 billion of earnings, EBITDA, and so by doing that, we've really set up a nice cash flow stream, for other organic projects that we have. Another area, you've mentioned refined products. People often don't understand that that's gasoline, that's diesel fuel, and jet fuel. And we're seeing really more demand for jet fuel, and especially in the area of the Denver area. Denver International Airport, we're the primary supplier of jet fuel out there. We're expanding a line that goes from basically kind of the mid-continent area in Kansas. We're building that out there right now. We'll have that online here in a year or so, year and a half, and that's going to be a really good opportunity for us to move both refined products, both gasoline, diesel fuel, and jet fuel, out to a growing market for us.
All right, that's great. We touched on a lot of topics, Pierce. As we maybe wrap up here, what would you say differentiates ONEOK from other midstream companies? And in your mind, what will be key to continuing your drive to success in the future?
So, Rodney, this is probably my favorite question, and it's an easy one to answer for me because I get asked this, quite a bit. The first thing is it's our culture. We define our culture by our values, and so we determine what are those behaviors, that that you should see around the values that we have. And then we educate our employees, both the employees that we have today and the future employees. As we onboard employees, we educate them on the behaviors around our values. Our values are safety and environmental, it's ethics, it's inclusion and diversity, it's excellence, it's service and innovation. And so we define the behaviors around those, and then we simply tell people that that's what you should expect if you work here at ONEOK. And then we simply ask one question. If that's not your experience, then it's your obligation to speak up, and we're going to have a dialogue and we're going to fix whatever those issues are. But we think we have a very special culture here at ONEOK, and it's a culture that those people that don't work here, can see it through our employees, and they want to join us. So that's the first thing. The second thing is it's the interconnectivity of our assets. I just mentioned that we divested of our interstate assets, not all of them. The ones that weren't connected, we divested of those. But everything else that we have, gathering and processing, natural gas pipelines, we still have natural gas pipelines, both intrastate and interstate, and storage. And then we have NGLs, we have refined products, we have crude, we now have crude gathering. We've expanded down into the Permian Basin. So all of that interconnectivity allows us to basically move those molecules and touch those molecules multiple times. And not only touch them multiple times, usually transport them over long distances. That's what brings the value, to our shareholders, is the number of times that you can, move that molecule. And basically, you're doing this because where they're located, they have a lesser value than where they need to go for the demand. So the more times you can touch them, and the longer the distance, the more value we create for our shareholders. That's the second thing. And the third thing I would say is our intentionality and our discipline to our capital allocation model. That's kind of threefold. Our first priority is to invest in new projects, organic projects that have high returns, for the company. And our people have been able to find those, and through these acquisitions, we've been able to increase those because, they have the interconnectivity. A good example of this is we've been able to do M&A with the Easton acquisition that connects our Mont Belvieu assets over to our East Houston assets, our Galena Park assets, and our Pasadena assets. So all that interconnectivity just means more value, for our shareholders. And the other thing there is, increasing our dividends and looking at share repurchases. We target to basically spend about 75 to 85% after we fund our capital projects into those two areas, either dividend increases, or share repurchases. And then I'd say, the last thing is our debt reduction. Is we target a 3.5 times debt to EBITDA. We will flex that up if we see an opportunity for what we would call a strategic acquisition. And we don't have a problem with that falling below 3.5 either, if the circumstances were that. But you got to target something. So we target 3.5, and we have we got a strong balance sheet, and we get very favorable ratings, from our rating agencies, both Moody's, S&P, and Fitch.
Where should people go if they want more information on ONEOK?
Well, you can go to our website, which is ONEOK.com. Brag a little bit on our IT folks there, and especially our investor relations. They've built a really nice website there that I think is easy to navigate. And you can find out just about all the information that you want on that at ONEOK.com.
All right. With that, I think we'll wrap it up. Pierce, it's been great to be with you.
Great to be with you too, Rodney. I look forward to seeing you.
Hello and welcome to a new edition of the GLIO CEO Q&A series. My name is Fraser Hughes, and I'm the CEO of the Global Listed Infrastructure Organization, or GLIO. In today's interview, we'll focus on energy transportation, and I'm pleased to introduce Piers Norton, CEO of ONEOK, and Rodney Clayton of Duff & Phelps Investment Management. Guys, over to you. The floor is yours.
You in person real soon, and appreciate again GLIO organizing this event.
Piers, Rodney, thank you so much for that great discussion. For the viewers, we have another CEO Q&A coming up, and that is with Cellnex and GIC. So please keep your eyes peeled for that interview. And until then, thank you and goodbye.